Free money from the government. Today we're going to go through some of the government incentive programs that could save you hundreds, maybe even thousands of dollars. These programs are aimed at owners, buyers, and first-time buyers specifically. Buckle up, there's a whole bunch. Probably the best known program in Canada for home buyers is the RRSP Homebuyers plan for first-time homebuyers. This plan allows you to borrow up to $35,000 from your RRSP in order to use for a purchase of a home. In order to qualify for this program, you have to be considered a first-time buyer. By first-time buyer, they mean that you can't have occupied a home that you owned for the last 4 years. This applies to your spouse as well. Your spouse or common law partner can't have occupied a home that they own in the last 4 years, and they too can borrow $35,000. So if there's two of you, you can borrow $70,000. There are some exceptions to the 4-year rule, most notably in the case of marriage breakdown, but what most people don't realize is that the funds can be used for any purpose as long as you're buying a home. Specifically, you have to have entered into a written agreement to buy or build a home. You can withdraw funds at any time once the contract has been signed, even up to 30 days after the purchase is actually completed. So you could buy a home and then go and apply for the RRSP Homebuyers plan to help you with your furnishings, for example. The critical timing feature with the Homebuyers plan is that repayment starts 2 years after the first withdrawal. So if you enter into a pre-sale contract with a developer where you don't complete for 2 or 3 years, it's quite possible that you would have to start paying back into your homebuyers plan before you've actually completed on the home, which is probably a situation you don't want to get in. The way the repayment works is that you repay 1/15 of the loan from your RRSP to your RRSP each year. Basically, the first part of your regular RRSP contribution does not count as tax deductible. It's just simply a repayment back into the money that you borrowed. This program is great for first-time buyers and often will make the difference between being able to afford a down payment and not. In order to participate in the Homebuyers plan, you get the tax form T1036 from your bank, fill it out, and tell them you want to withdraw from your RRSP. Now, depending on where your RRSP is invested, this can take a few days, so I always recommend doing it ahead of time. Also note that you may not be able to borrow from some types of RRSPs, such as group RRSPs and locked-in RRSPs. The RRSP Homebuyers Plan is a great program, and it's helped many Canadians be able to buy their first home. Another program for first-time buyers is the First Time Homebuyers Incentive. In this program, the government matches your down payment if you have an insured mortgage. So if you have 5% down payment for a home, the government will match your 5% to bring your down payment up to 10%. Now, this will save you both on the size of the mortgage and on your insurance premium. Unfortunately, qualification for this program can be kind of difficult, as it's limited to households with a total income of $120,000, $150,000 in Toronto, Vancouver, and Victoria. Similarly, the mortgage amount is limited to 4 times the household income, 4.5 in those 3 cities, which can make it difficult to qualify for. This program hasn't proven to be all that popular because there's a bit of a catch. Specifically, when you go to sell the home, you have to pay back not just your 5%, but also the appreciated value of the home on the 5%. So if your home goes up 5%, then you're paying 5% on your 5%. Still though, if you're able to qualify and you're willing to accept the equity implications, it can be a great program for some people. Okay, this next one applies to all new home buyers, not just first-time buyers. GST or HST, depending on your province, applies to new home purchases in Canada. Not only new home purchases, but homes that have been substantially renovated. So you may be buying a home that's not technically new, but have to pay GST anyway. The rate of GST is on a new home sale is 5%. Luckily, depending on the purchase price of your home, you may be eligible for a GST rebate. Specifically, the rebate is 36% of the GST paid for a home value up to $360,000. Above $360,000 and up to $450,000, the rebate is gradually phased out, so that homes above $450,000 purchase price are not eligible for the rebate. You want to be careful with this one though, because in some cases the developer can actually claim the rebate for themselves and they work it into the purchase price. Know this before you go and negotiate your contract. On the other hand, if you've already got a contract with the developer to buy a home, make sure you understand who gets the GST rebate, as the developer may have already claimed it. Depending on which province you live in, property transfer tax can be a huge expense when buying a new home. BC, Ontario, and PEI all have rebate programs, and we'll look at the BC example here. In BC, the property transfer tax on a residential home is 1% on the first $200,000, 2% on the next portion up to $2 million, 3% on the portion to $3 million, and 5% above $3 million. First-time homebuyers get a full exemption up to the first $500,000 of purchase price. It's phased out between $500,000 and $525,000, and above $525,000 there's no exemption, unless you're buying a newly built home, and this doesn't just apply to first-time homebuyers. If you're buying a newly built home in BC, you're exempt from property transfer tax up to $750,000 purchase price. Between $750,000 and $800,000 you get a partial exemption, but there's no exemption above $800,000 purchase price. The property transfer tax rebate can buy new home buyers and buyers of new homes thousands of dollars. The newest program coming into effect in early 2023 is the tax-free First Home Savings Account. This program combines the best of the TFSA and RRSP savings programs. You can contribute up to $8,000 a year, up to a lifetime maximum of $40,000 a year. Now, like the RRSP program, contributions are tax deductible, and like the TFSA program, you don't need to repay these funds once you've withdrawn them in order to buy a new home. The only real caveat with this program is that once you've opened it, you have up to 15 years to buy a new home. If by the end of 15 years you haven't bought a new home with those funds, you can roll them into your RRSP, so really no harm done. This is a great new program. First-time homebuyers can also claim the First-Time Homebuyers tax credit on your annual income taxes. On your T1 General, go to line 31270 and claim the $1,500 rebate. It's free money. Everyone in British Columbia who occupies the home that they own is eligible for the HomeOwner Grant. This grant reduces your property taxes by $570 in Vancouver, Fraser Valley, and Victoria, and $770 everywhere else. An additional grant applies for seniors, veterans, persons with disabilities, or persons living with persons with disabilities, and the spouses and relatives of deceased owners. The critical thing with the homeowner grant is that you have to apply for it every year, and instructions on how to do that are actually attached to your property tax bill. Normally, it's just a matter of an online declaration. This is a good time to remember that you also have to apply for your vacancy tax exemption every year as well. By doing these two declarations every year, you'll save yourself hundreds of dollars off your property tax bills.